Welcome to our weekly Forex forecast, and this is for trading for the week of November 16th to the 20th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. Okay, so starting, actually, before we dive into the news, so one of the things that we have to be mindful of as we are going into winter here, the number of cases around the world are going up, and we are highly likely to start seeing more of the lockdown. So although most countries are trying to take measures that are not so that we're not back into complete lockdown, but at least we are making effort to actually stop or lessen the impact of the virus. So there is a vaccine. So we have seen some positive news in regards to vaccine, but the vaccine actually won't be available even after it's been given permission or approved to actually get production going. We won't see a vaccine into maybe spring, so not quite yet. And we still have the winter months to get through. So the number of cases are going up alarmingly, especially in the US. I think they're at about 150,000 cases a day. And it was just about a week ago, it was at 100,000. So they are going up exponentially. And in Canada as well, the number of cases are going up, and as they are in European countries as well. So in regards to our trading, this is likely to have a negative impact on the stock market, but there are also positive expectations around more stimulus being provided by the governments as well as the central bank. So it'll be basically two opposing forces coming into the market that will have to get around. So just keep that in the back of your mind as we go into these winter months. But with the stuff shutting down, if we are going back into the lockdowns, that will be negative for the economy. And as a result, that should be negative for the stock market as well, and positive for the safe haven assets. And our safe haven currencies would be US dollar, Japanese yen, and Swiss franc. All right, so let's take a look at what's coming up here. We have ECB as well as Reserve Bank of Australia here. We have monetary policy meeting minutes. Now, again, with all these central banks here, the main theme would be to see what are they expecting in regards to the virus impact on the economy. So if they are concerned about it, and we also have MPC and FOMC members speaking here. So if they are concerned about the state of the economy as we go into the winter months, that would be negative for that currency. So if Australia here, they express concerns, then we're likely to see Australian dollar drop. But we saw from New Zealand, they did say that they're going to do more stimulus, but overall, it wasn't too bad. And that's why we saw New Zealand dollar go up as a result of that. So it will be the commentary or the sentiment that they express that will drive the sentiment in the markets. We also have OPEC meetings. Now, with oil here, if the economy starts shutting down, businesses are shutting down, that will be negative for the demand of oil. And when the demand decreases, the price of oil will decrease as well. So we'll have to see what sort of measures OPEC is going to put into place. If they start cutting production, that will be positive for oil, because then oil price per barrel would go up. But if they don't cut production and we are seeing a decrease in demand for oil, that will be bad for the oil. So we'll keep an eye on that. We also have core retail sales numbers here for the US. So right now they are expected to decline, but if the decline is bigger than what's expected here, that again will be negative for the US dollar here. And of course we have also, we have Reserve Bank of Australia, Governor Lau speaking on Tuesday as well here. On Wednesday, we have a lot of CPI. So we have CPI numbers out of UK. Right now, it's expected to stay the same. So if it's similar to what it was previously, that would be that should not have too much of an impact. But if we start seeing the numbers coming in below the expectations here, that would be negative. So we have CPI numbers for pound and for the euro. And for a pound here, additional volatility is likely to be seen from Brexit. So last week or the week before, there were a lot of positive comments in regards to Brexit deal being reached, but we haven't really seen them reach an agreement. So there were comments in regards to how they are likely to reach a deal by the beginning of November, and now we are mid-November, and there's still no deal. So if the Brexit talks don't go well, that would be negative for British pound. So we have seen pound go up quite a bit because of those positive comments. And now that we're not seeing the deal, if that continues, that will be negative for British pound. And of course, we have CPI numbers here from Canada as well. So same thing here, if the CPI numbers decline, that would be negative for Canadian dollar. And of course, a lot of data here for Australia. We have employment numbers. These numbers are expected to worsen, which is to be expected, especially with the virus, the way things are right now around the world. So the concern will be if the numbers are bigger to the downside, that would have a negative impact on Australian dollar here. And of course, we have employment numbers here from Canada. This is not, so Canada has been going down, or we have been locking down here, trying to do it in stages. It's not as bad as it was previously, but then we'll see how things shape up here. But if the numbers are looking bad, this will be negative here for Canadian dollar. And of course, the drop in oil prices will also be negative for Canadian dollar. We have ECB again and all the way into Friday. So expect a bit of volatility this week, but right now the main thing will be what's going on with the virus and how are we able to handle that. All right, so let's go into our charts here. We'll start off with euro dollar. So euro dollar still trading in this range that it's been in for the last several months here. Since May or June here, price has been trading in this range. So this week we saw that price came back and tested the support level at 1.1750. It's holding above that for now, but it hasn't broken through here. So right now I'm neutral on this. There is still some bearishness in this and going forward. So we'll have to see a couple of different things that will have an impact on euro. It will be the Brexit plus the situation with the virus. Both of these are likely to impact the euro. So we'll keep an eye on it. Right now it's negative, but it's also, excuse me, but it's also showing rejection. So I will look for a bit of a drop here. If it holds above the support level, then we're looking for a move back. So right now I'm looking for a range bound move. And once it crosses either through the high or the low, then we can target the outside of the range or the broader range for the targets here. But until then, this is neutral, and I'm looking for a move back into 1.1750, and if it holds, back towards 1.1900. So neutral bias for euro dollar for the time being. Pound dollar here, pound is showing rejection here, all that positive sentiment in regards to the deal being reached hasn't quite panned out. So now we are into this important support resistance level. Price wasn't able to break through it. So at this point, looking for a bit of a pullback and then a move back towards the bottom of the range. So this has been range bound for a bit here as well. And again, with this one, similar to what we saw with euro, there is a broader range and then it's been going back and forth within a narrower one. So this one shows rejection, which means we may see a drop here. So especially if we don't see any progress in the Brexit talks, that would be negative for the pound. So we're likely to see a drop. So right now, neutral to bearish bias here for pound dollar. I'm looking for price to come back first towards the base of this candle at 1.3100 and then back towards 1.2850. And in between, we do have this 1.2980 level. So targets would be 1.3100, 1.2980, and then 1.2850. So neutral to bearish here for pound dollar. Aussie dollar here, this one is also showing rejection. We see price went into the resistance level here and couldn't make it through. As a result, we have seen a drop. Now, similar thing here as well. Price has been trading in a bit of a range over the last several weeks here. And now we are back into this range. We're seeing the rejection from the high, which means we're likely to see a move back into the range here. So bias for this one is bearish for now. Not a very strong bearish candle, but it is starting to show signs of weakness. So Australian dollar and New Zealand dollar will be negatively impacted if we see risk aversion in the market, which means if the stock market starts to sell off, then Australian dollar and New Zealand dollar will start to sell off as well. So that's something to keep in mind as we are trading as well. So right now, bearish bias, not extremely strong bearish, but bearish nonetheless. So first target is 0.7220, and then basically we're looking for a move lower into 0.71, 7150, and then 0.69700. So bearish bias for Aussie dollar. New Zealand dollar, this one as well went through that resistance level all the way into this major support resistance level here. And we are seeing a rejection. So this here is what we may start seeing in this area as well. So right now, bias is neutral. There is bullishness in it, but there's also the pin on top, which means price is rejecting the resistance level. So we may see a retest of that. And then if it holds below this level, then we're looking for a move back towards back into this range here that it was trading in for quite some time before it tried to break out. So we may see similar behavior here. It may start to go sideways here before it really drops. So for now, neutral bias for New Zealand dollar as well, looking for a bit of a pullback and then a move back towards 0.6800 and potentially lower. Dollar CAD here, this one has gone up. So oil price wasn't that great. And when oil price is not good, we see Canadian dollar drop, which means dollar CAD goes up here. So now it is into resistance level. So I'll watch out for that, but it is looking bullish. So we may see a move all the way back into the top of the range here. Just be mindful of the resistance. If it doesn't get through the resistance that it's currently at, we could see a decline. But once it gets through, then looking for a move higher into the resistance towards 1.3420. So bias is bullish, just slight caution here. Euro pound here, this one has been going back and forth as well. We saw a sharp decline and then move back up. So right now this looks neutral, again, because we have a rejection, but there's still bearishness in this. So I would be looking for a potential pullback here and then move back towards 0.9050. This will definitely be impacted by Brexit talks, so we'll just have to keep an eye on news in regards to that. For now, bias is neutral to bearish here. Euro Swiss franc, this one is still stuck up there. Now, it hasn't been able to go through the resistance, so it's been struggling with it. And we do have a bit of a pin bar. It's still holding up. Euro was strong this week. So now I'm looking for a move back towards 1.0775. So this one is neutral to bearish here for Euro Swiss franc. And once this drops, then we have this big candle that could get filled. For now, though, we have to see a break through this in order for this inefficient move to get filled. So right now, this is neutral. Pound Swiss franc here, this one as well, still trading in that range. And this one's pretty much gone from the bottom of the range to the top here almost. So this is the outside range that it's been trading in. And within that, it was holding here and it shot all the way into the highs. Now there is rejection here. So this one I'm neutral on as well. I would look for a bit of a pullback, and then if it holds, move back towards back into the support level here. So neutral bias here for pound Swiss franc. Again, the strength in the pound will all be dependent on what happens with the Brexit talks. All right, dollar Swiss franc here hasn't really done a whole lot. It's been trading in a range, went all the way into the support level here, tried to break through, couldn't manage, and here we are back again. At this point, US dollar was strong last week, but we are right into the resistance level here. So if it doesn't break through, we're looking for a move back down. So this is neutral as well because it's still trading in the range. Now, should it go through this, then we'll target this. But for now, I'm just looking for a potential retest. And if it fails, a move back down towards the middle of the range here. Pound yen here, this one again was quite interesting. It went back and forth as a result of the Brexit talks. And now we are seeing rejection. So looking at the daily here, we see this rejection, but it's into support right here. So it hasn't been able to break through that resistance level, which is now acting as support. So if it doesn't break, it could go back up. However, once we see it hold below the support level 137.75, then looking for a move back down. So this one is a neutral here as well. We may get a bit of a pullback here before it drops. So it may go up a bit before it goes down. So bias here is neutral again. Euro yen here, this one is looking more bearish. So on the daily here, we are seeing a rejection. This one has also been trading in a range. So a lot of these crosses have been range bound for a period of time here, for several months, because we don't really know what's going on, really. So this one here, that's what I will look for, looking for a move back into the range. This is slightly more bearish than the pound, but that can change fairly rapidly. If the Brexit talks fall apart, then euro will go up and pound is likely to drop. So we'll keep an eye on the Brexit talks for both euro and pound this week. But right now, this is also range bound. So I'm looking for a bit of a pullback and a drop. So neutral bias for euro yen as well. Dollar yen here, this one again, not really doing a whole lot. We are again neutral on this one as well. Price is right into the resistance. We see a bounce off of the resistance there. So same thing here, looking for a bit of a pullback. And then if it holds, we're looking for a move back down. So dollar yen also looking neutral at this point. But if the concern over the virus starts to become a really, so basically if everybody's concerned about it, so by everybody I mean the health officials, the central banks, the governments, then that will have a negative impact on the stock market, and we are likely to see the stock market drop, which means all the yen crosses will also drop with the stock market. So that's the relationship we need to be aware of as we go into these winter months. So this one here as well, we're seeing rejection. There's still some bullishness here, but I'm looking for a move back into the range again here. So this as well, this is the range it's been trading in for months now. It tried to break out, couldn't maintain it, came back in, and now I would be looking for a move back into the range here. So neutral bias, looking for a move towards 73.30. New Zealand yen here, this one did manage to break through the resistance, but doesn't look like it's able to hold there. So we're likely to see a move back here as well. This one is stronger than some of the other ones, so we'll have to be careful with that one. But this is very similar in the formation here to what we just saw for Aussie as well. Now we are seeing this one break out, couldn't maintain, and now I'm looking for a move back into the range. But this has been range bound as well since May. Really, it hasn't really gone out of this range, even with all the positive stuff that was going on in the stock market. If it couldn't go through, so if the stock market starts to drop, this will drop with the stock market. So just be aware of that, because with all the positives, it couldn't get out, which means it just doesn't have that strength. And then CAD yen here, this one filled the inefficient move already here. It's looking more bearish than anything else. This is also trading in a range here, but as we can see, price went shot up and then we are back again. So with oil, the most important thing to keep in mind with oil would be the cases, coronavirus cases. If the economy starts shutting down, oil is dropping. And with oil, Canadian dollar will drop and CAD yen is likely to be sensitive to that. So right now, bias here is neutral to bearish, looking for a move back towards the support level at 78.00. So bias here is bearish. All right, so let's take a look at our silver here. Silver is still looking range bound here. It's been trading within this range for a bit. Here we are. So from a weekly perspective, we're still in this range. There is bearishness, but again, it's not, the candles at this point are not very strong in either direction. So this is what I'm looking for. We may get a bit of a pullback, and if it holds, looking for a range bound move here. So neutral to bearish bias here for our silver. Gold here, similar move here as well. We see this is totally stuck in a range, still hasn't been able to break either through the high or the bottom of the range. So still looking range bound. With this one, we are seeing that rejection from the bottom. We may see another retest, and then if it fails, we're looking for a move back in. So bias here is neutral for gold. Now, if it does break through the support, then I will look for a move all the way into the base of this candle. Until that time, though, this is still range bound. Oil here. Oil was attempting a recovery here, trying to make through the resistance all the way into the top of the range. Oil as well, as we can see, oil has not been able to make any higher highs, even with the stock markets breaking all-time highs. Oil hasn't gone through, which means with the economy shutting down, it is not going to be positive. That will be negative for oil, and we're likely to see a drop. So right now, my bias is neutral for the oil. We may get a retest. The only thing will be to keep an eye on the OPEC meetings, because if they start making cuts, that is likely to push the oil price higher. But if they stick to their guns and the production limits that they currently have, then that is not really going to help oil. And with the demand decreasing, we are going to see a drop. So right now, bias is neutral for oil. Copper here, copper's been going back and forth this week. It did drop from the top, but it pulled back again. So at this point, this is looking neutral. It's still holding on to that bullishness. And if it goes through, we could see it go all the way into the highs here. But for now, bias is neutral. We have to wait till we see a break through the resistance, then we'll aim higher. For now, this is neutral, and I'm looking for it to trade between the high and the low of this week's or previous week's candle. Bitcoin still looking bullish. I don't have the weekend numbers here, so please take a look at those. But looking at the overall picture here, this is looking quite bullish here, with a lot of interest in Bitcoin lately, and it's starting to again garner the interest from people. So this is bullish overall, still looking bullish. So we could see this one go higher towards the 17,000 level, or potentially even higher. So for now, bullish bias for Bitcoin. All right, taking a look at the stock market, still looking very bullish here with the Biden victory. We have seen price go up. Now we don't see a clear victory for either side. So Republicans haven't managed to win overall. Neither have Democrats. So Democrats still have the House. Republicans still have the Senate. So we have a split government. And right now, President Trump is more focused on basically trying to win the election through lawsuits and so forth, rather than taking care of what's going on in the country in regards to the viruses. Now, different governors are stepping up and putting some stuff in place in terms of mask requirements and other things like that. But there doesn't seem to be a coordinated effort from the top leadership at this point. That means till power gets transferred in January, there isn't likely to be what do you call it, a strong leadership in regards to controlling and managing the virus, which means we could see a major outbreak in the country, and that will be negative for the stock market. So right now, no stimulus is likely to get passed. President Trump has essentially refused to go to the table. So basically, this is no different than what it was before. Basically, even if they're at the table, there's really no agreement on the stimulus package. So the best chance of stimulus package passing will be in January, and that too, it may be difficult because the government is still split. So what that tells us is that there may be a negative impact. Now, the technology companies are likely to do well because with everything going back into shutdowns and stuff, it's better for technology companies, Amazon, and then of course, we have Google and everybody else that will benefit. Facebook, they'll benefit from that. But for the rest of the country, that may not be such a good thing. And bearing all of that in mind, we can expect the stock market to not do so well. So just bear that in mind. Even though we have seen this big rally to the upside, we may see that rally run out of steam because businesses cannot do well when things are shut down. And there may be no other option because of the number of cases in the country. So with all of that in mind, this is neutral to bearish, and I will look for a move back towards 34.80 level and then potentially into 34.20. So neutral to bearish bias here for S&P 500. Now, Nasdaq, on the other hand, we have seen a bit of a decline. It's still trading in this range. So right now, I'm looking for a range-bound move here, still stuck in this range with the technology companies doing, hopefully doing better here. We may see this go up, but there may be, the investors may be spooked with the stock market. So we'll keep an eye on it. Right now, it's a neutral. I'm looking for a range-bound move here. So a bit of a pullback and then potentially a move back lower here towards the support level. So neutral bias here for Nasdaq. And then Dow Jones here, this one has been going quite crazy, but there's the rejection on the top here. So I would be careful. I'm not too bullish on the stock markets right now, even though it's been pushing higher, because it just doesn't make sense with the cases growing. Unless we can produce a vaccine really, really fast, I think we may be going through a darker period before we get through to the other side when things are starting to look more upbeat and positive. So with that in mind, I think we are likely to see a bit of a downturn in the stock market as well. So for now, I'm neutral on this, not bullish. So we may see a move back here into 28,580-ish level here. So neutral bias for Dow Jones as well. And DAX here, DAX also pushing into the highs. We do have a strong bullish candle close here, but I think we may start seeing similar concerns and we may see a move like that. So a potential retest here, but then looking for a drop towards 12,685. Stock market cannot do well if the businesses are not doing well. So that's something to just bear in mind. And of course, we have seen FTSE be really bullish, and a lot of that had to do with the positive Brexit talks. So if the positive Brexit talks continue, then we're looking for a move higher towards 6,500. But that's where we may hit a snag, because even with the positive Brexit talks, what's going on overall with the virus is likely to have a negative impact. So this is where we are fairly close to it. So we'll just keep an eye on it and see how it goes. So for now, bias is bullish for FTSE, looking for 6,500. And Nikkei has been extremely bullish. It's gone through the resistance level and still looking quite bullish here. But again, we'll keep in mind what we discussed here. And in terms of where we are at, it's gone through the roof. So with the virus, though, I'm not sure if we'll see this. That may not happen, but I think we're likely to see some sort of a turnaround here. So looking at the daily here, it's still holding. It's looking bullish for now. So we may see a move to retest the highs. And this is where we'll have to be careful at the highs. If it doesn't go through, I will look for that turnaround. Right now, the way it is, though, it is looking bullish. So I would say bullish, and target is 25,880, and then we'll keep an eye on this on the daily. So doing our daily call. All right, so that's it for today. There was a question in regards to trading during the holidays. I am not a big proponent for trading during Christmas holidays because liquidity is extremely low, which means the things could just take off in either direction. When there's low liquidity, there's just the orders are just not there, so there can be quite a jump in the market, or it may be dead. So either of those two situations can happen, and we can't really predict which one. So I don't like trading during periods of low liquidity. Okay, so question, my opinion about Trump and Biden regarding the US dollar. So we'll have to, it's not a clear victory. If it was a clear victory, then we could have said that actually, if either one of them had a clear victory, we would have basically looked at more stimulus. But now, because there isn't a clear victory, and there is still this back and forth in regards to the election, with Biden winning so many votes, he's at way above at the 90 area. He needed 278, I believe he's at 290, if I'm saying that right. Anyways, he seems to have the clear lead, and because of that, I don't think it will get reversed, but he doesn't have a clear victory. And this is what happened with Democrats previously with Obama. When they didn't have clear victory, they couldn't do anything because the Senate wouldn't vote in their favor. So they couldn't get anything done. And that's going to be the concern. And that would not be good for the stock market or the, so we'll have to see. So 306 to 232, thank you, Bill. So right now, Biden is in the lead. I think that's going to stand. The election results are likely to stand the way they are. But in terms of our trading, I think this is going to be negative for the stock market for the time being, at least until January, because of no clear winner and no real leadership. Control of the Senate, I think they'll win in Georgia. I think Republicans have the Senate. I don't think Georgia has always, they've been a red state, so I think they're going to win. So I think Republicans will have the Senate. And hence, there's not going to be a lot of progress, unfortunately, in terms of stimulus package. They may get it passed. I think it will have to get passed in January, whichever way. I think they'll have to come together and pass the stimulus package. But until late January, we won't have anything. And that will be negative for the stock market because companies will need stimulus. I don't think this optimism that we have seen in the market is going to continue. There was optimism with the elections and there was optimism with the vaccine, but the reality is even with the vaccine getting approval, we won't actually see the vaccine for mass distribution till April, and that would be bad. So those are just, again, my opinions. We'll see how things play out. But essentially, we just have to be careful about this period that may not be very rosy that's coming up. All right, so that's it. You guys have enjoy the rest of your weekend. I would say this year has overall been crazy So I think for us as traders, I think we just need to chill out a bit more and maybe focus on things that are more important, that, you know, now we will actually have time, or we have time for family and stuff like that. So that may be where we want to focus for the next little while till we're out of this crazy stuff. All right, so I will see you guys later. Bye for now.